This conference will now be recorded.
This is the meeting to have the audit presentation. I guess we need a roll call vote of who's here, or do we do this from what you guys have listed? Glenn.
I think, you know,
Laura
if you
present.
there you go. Can we just go through? Can I just ask people their names? John Slepczak from Phillipson here, correct?
John Slepczak here.
Great. Stacia Donahue, Stacy from Harvard, you're here.
I am here, thank you.
Awesome cap, Stacy. Love it. Rick Ward, you're here, sir, from Winchendon.
Yep.
Very good. Barbara Yoakum, you're here from Shirley, correct?
Correct. Sorry, I couldn't unmute. I'm here.
No worries. That's no sweat. Alan Pease is here from Mashpee, correct, sir?
Yes, I am.
Thank you, Alan. Laura, you chimed in, but I want to verify. You're here from Townsend, correct, Laura?
That is correct.
Thank you, Laura. And Jessica DeRoy from Gardner.
Yes.
We have a guest in Roland Lambalot. For the record, he's our CPA. He's going to do the audit presentation. Staff in the room is going to be Chris McNamara, our fiscal assistant. We have also with us Linda Quinlivan, our fiscal director. We have Kayla Kress, our GIS analyst and IT assistant director. And we also have Holly Ford, administrative manager. So, John, that accounts for everybody in the Romper Room or Hollywood Squares on the screen, sir. Back to you.
Okay. And then are there any questions or guest announcements that we need before the presentation? Being none, I would like to hand this over to Roland for the presentation.
Okay, thank you. For those of you who've been here for prior audit presentations, some of the discussion will feel repetitive because obviously ongoing issues have a tendency to do that. And as we start the presentation, it just seems like we're ending one crisis and possibly venturing into another. Pandemic appears to be gratefully winding down. The audit was again handled mostly in my office. As I had indicated last year when we were going through the same audit experience, this has had the effect of potentially causing what is known as a scope limitation. That is, when the auditor is precluded from performing certain audit functions. This is more of a concern in the private sector. We didn't have that issue, obviously, doing this audit. Linda had forwarded a substantial portion of the reports that were requested. This gave us the opportunity to review what transpired during the year as far as any changes in funding sources, staffing levels, and unusual activity. And we also requested additional documentation as necessary. We were provided all the materials requested in order to perform the procedures developed in our audit programs. I feel that our years of experience with auditing the Commission statements, understanding the internal controls and the financial and accounting peculiarities of the agency, help us to mitigate any issues that we might have in rendering opinions on the MRPC's financial position and compliance with federal program requirements. The audit reports reflect an unmodified opinion on the financial position and no findings to be reported on in the areas of internal control and compliance. There was also no management letter. Given the devastation of the Omicron virus on daily activities and various health pressures placed on staff, the focus of our audit this year was adjusted to use restraint in looking for findings that are simply mistakes, such as posting a transaction to a wrong account or missing capitalizing an asset purchase. Unfortunately, in a couple of audits that we've done, the findings have come seeking us, both material and painfully obvious. A new area of audit concentration arose from the federal free-for-all arising from the CARES Act and the American Rescue Plan. Significance was in tracing direct assistance grants and federal funds passed through state agencies. Little guidance was provided in the pass-through funds received. I'm going to start with a quick run through the bound financial statements, highlighting items that I have that are either significant or new to the agency. I'm going to start on page 13. I see we have it on the screen in front of us. It makes it a little easier for everybody, obviously, to see what I'm talking about. Now, I think, I say it's the audit page 13, and I'm trying to see what that. Okay, you've got it there. That is on the bringing just your attention, the Governmental Accounting Standard Board statements that they have issued that will be effective essentially for 2022. We're 9 months obviously past 21, sort of into the last 3 months of the year. It's going to be essentially GASB 87 and 97 on leases and for deferred compensation plans. And these are going to have a minimal effect, if any, on the agency going forward for the next audit period. This year's audit covered a couple of items, 84 and 90, which have absolutely nothing to do with the commission. 84 would have been, and I'll discuss why that would have been of required implementation in this year a little bit later on. And now I don't know how you want to proceed with this, whether you want to just jump in with questions as we go along, wait to the end. It'd probably be better off to pose them as we go along rather than try to go back. Anything on this? Like I say, it's just a matter of the statements that this governmental board just seems to churn out at a pretty regular pace. They did take some time off for the pandemic, which was nice of them. The next page
I agree,
is,
Roland. I think if anybody has any questions, they should speak up.
Yeah,
and
just pop them in as we go along. I think it'll be easier that way.
Okay.
Want to just move on to page 23 of the audit report. And this is one of our repetitive issues. Note 16, the commitments and contingencies, the ongoing state retirement dispute. They were nice enough to send another bill this year for the accumulation of what you owe them going back to, I forget what year it is, I think it says it inside the 2013. And if you were to obviously pay off what they'd like you to, it's over $1,200,000. There's apparently, from the last I've heard, some competing bills that have been presented in the State House. And it appears that there's no settlement in sight. I think the latest bill filed, as I understand it, is not very productive, the MRPC, obviously from a cost perspective. So I guess this is just going to continue on until most of us are doing something else. But yeah, let's hope that they can finally come to an agreement on this and not make it as cost prohibitive as they seem to want to do. Anything on this point? Okay. Now, page 31, next one over. Oh, actually, I wanted to go to page 30. So I'm sorry, I missed a page. If you could just scroll up. Okay, this is the budgetary comparison. And within the budgetary comparison sheet, you'll see a little asterisk for the OPEB expense. And there's a statement at the bottom of the page that indicates that, obviously, from a budgetary standpoint, you can't possibly anticipate what the number is going to be for the year. And as you see it, it's in parentheses, meaning that because of the effect of the run up in the stock market, you actually have a profit this year. You don't have an expense, you have a profit, which is kind of an odd situation. First I've ever seen in these actuarial things, but then again, we haven't had the kind of run up like we have had. What that does is obviously affects the bottom line, the excess of revenues over the budgetary expenses. And it looks like you made $269,000, which is not really the case. If you were to remove the OPEB, the budgeted excess would be $129,000, which is, comparative to what you're budgeting. I think you get a little bit aggressive on the profit that you think you're going to make. Because I think when you take out that OPEB, your actual profit is, I take that back, is $34,778. You subtract the $234 from the $269. So the excess revenues are substantially less than what you were budgeting. I guess you were hoping for more than what came in. And so that just a comment relative, to that, mostly on the OPEB effect. If you maybe consider doing this a little bit differently next year and having the OPEB number maybe at a couple of different sets of lines on there, so that it does show out what you really did and what your real variance is versus what you see on that schedule.
Excuse me, Roland, this is Barbara.
Yeah.
You're
Yes.
saying 69, I'm seeing 278 on the screen. Am I looking in the wrong place? Lower right-hand corner?
Those
Where's
are the total expenses. The
Right.
OPEB expenses under the actual, it's it's got a little asterisk, a little, what do you call that, star thing next to it.
Yeah, is the 269 on this screen?
Yeah, that's the actual excess of revenue over expenses. If, effectively including that profit per se from the actuarial report of OPEB.
Okay, but that number is not showing here, is that correct?
Yeah, we don't see it.
Okay,
I'm not sure if it's lower.
Which
It's not
number?
on what we're seeing.
okay, there it is. It's, there.
At the bottom,
Sorry,
the
couldn't
second
see.
one in,
Yeah,
269, 146.
yeah, thank you. We needed to scroll up.
Okay. Okay. Okay, now we'll move on to page 31. Generally don't go into the nuances of the individual contracts, but this is the first year that you've had a mass contract that was a one-year contract. And as you can see at the bottom, if you get down, you'll see the $21,518 excess of, I should say, deficiency of revenues over expenses. Essentially, what happened in that contract is the indirects, the indirects obviously have a negative impact on it. And the rate that you were using obviously did not cover the costs that were incurred. So for that particular grant, you've got an unfortunate negative impact on the bottom line. Now, if we switch over to page 32, you'll see a similar overrun. It's the MART contract. And that one, I believe, would be more indicative of a reduction in the contract limits from the past. They used to give you more money. And obviously, from what I suspect, they're having their own issues from a financial standpoint that probably felt it wasn't necessary to provide the similar funding source for you as they had in the past. So again, just pointing out these particular accounts where things did not turn out very well for them. Any comments on those two statements? Okay.
If I may, Roland, just on the MARC contract, this is the proof in the pudding. When I told the commissioners last summer, June and July, that I didn't sign the MARC contract because they weren't paying us the overhead rate that we required to have paid. I didn't sign the contract. Yes, they did lower the overall revenue over the last 10 years from about 160,000 down to 125,000 down to 102,000 for the last few years. But in fiscal 21, they wanted us to sign a contract, and I did, for a 90% overhead rate when we were supposed to get about 137%. So I only did that 1 year, and after that year, I said, "Dear commissioners, I'm not going to do this again. We're losing money," and there it is. And then didn't sign the contract and eliminated the transit project director's position. So that you're seeing now the loss in 21 from them not paying us the proper overhead rate. Thanks. Thank you, Roland. Back to you, sir.
Okay. So obviously this is not going to be an issue in fiscal 22.
Right.
We don't have a MARC contract anymore, so there won't even be a column for it, Roland.
Yeah. Okay. Where are we moving on? On page 34, I'm going back to a report that I put in there that I found is kind of effective for a couple of reasons. The Mass DOT contract on the right is the one I referenced a little earlier where you lost amount of money. you'll see that the grant was for a total of $765,000, and the total expenditures on it were $786. So effectively, you lost over $21,000. What happens is the losses are generally incurred in the final year. I should say incurred, but reported upon in the final year. These could have been losses that were accumulated in the prior year of fiscal 20, because the overhead rate in fiscal 20 was substantially higher than the overhead rate in fiscal 21. So that kind of drags along into this year. And you look at the bottom and you say, well, it doesn't look that bad because the grant's 765, they gave us 764, so they still owe us $1,000. Well, that's from a cash standpoint, but from a actual outlay, you put out $21,000 more on that contract, and obviously you're going to possibly see getting back from them. So again, just to highlight, and the reason I do this is MassDOT has always called for an indication in their audits of whether they made money, lost money. The commissions that I do all report this particular schedule. I don't think anybody else does. I think some of the other auditors that do this and some of the other executive directors either don't see the worth to this or don't feel that where the state hasn't come looking for the last 25 years, who cares? But, just continue to do this because the contract says you're supposed to do this. So again, that's, like I said, it's a presentation to them to put MassDOT on alert that, here are the numbers. So, one way or the other, here's the presentation so you guys can decide. Now, the next page is page 42. We are now into the schedule of federal assistance, where the reason I pick out this particular page, one, you'll see at the bottom, it's a summary of audit results, and you'll see down at the bottom of the findings that there are no matters of, for instances of non-compliance, and nothing for finding and question costs regarding to major federal award programs. But the one I wanted to particularly highlight is number 9. And number 9 indicates that the commission was determined to be a low-risk auditee. And that hasn't been that case for a while. It takes 2 years of not having a finding in an audit for that to kind of come to fruition. So 19 and 20, there were no findings. It's not relevant to whether you had one or not in 21. But again, it's, a low-risk auditee is obviously something they want to see when we file the data collection form tomorrow for you. Okay. Now, there's some items of interest I just want to bring to attention that I'm not going to pick out particular pages for them. They relate to the state retirement system. The pension liability where you two have to report it in your statements was $2,784,000. The pension expense for the year for the state actuarial report is $402,000. The required contribution, which was made by the state, as they have made for the last 50 years, was $175,000. And now you can see if you actually had to follow the actuarial report as far as the required contribution, you couldn't afford that on an annual basis. And it's kind of odd because they require a contribution of $175, yet they calculate an expense of $402. These things always kind of mesmerize me as to what they even mean. We note it as a footnote presentation, obviously, because the commission continues to argue that you're in a special funding situation, meaning somebody else, being the state, is actually making your required contribution. If you were to look in the state retirement report, there's a line for what the agency contributes, and that line is always 0. So like I say, this is obviously something that has got to come to a head at some point. They can't just keep either sending you bills and piling them up. As I indicated, I spoke at a meeting last night with Central Massachusetts, and it was brought up at that point that I believe Senator Gordon, I think, is involved in filing some legislation trying to mediate between the individual at the retirement board who's looking for just, ridiculous money, and the commissions and other agencies who are just looking to say, hey, life was great as we had it before. We'd like to continue.
Roland, if I may, Mr. Chairman, that is true. So Senator Gordon is on the relevant committee through which this legislation is filed in the House. And basically, Senator Gordon has made the attempt to find a middle ground between the state treasurer's office legislation, originally was called H48, and then the collective regional planning agencies and COGS legislation that MARPA has engaged a consultant to hire on our behalf to file legislation on our behalf. Basically, the Senate, I'll just call it the Senator Gordon legislation, includes a requirement to pay a percent of payroll, percent of total payroll in that pending legislation, and that percent of payroll that's been proposed is about 5%. So 5% of our total payroll is what the House is looking at right now, and we're still not in agreement that any percentage of payroll should be included. And this is the Mass Board of Retirement's problem. They should keep it. The state is funding this. Just keep funding it. So we are still, to Roland's point, I'll conclude by saying that yes, it will come to a head someday. I don't know when. There's still negotiation to happen, and we're still educating the House members that don't even understand who we are, and some of them are understanding much better right now, which is good. But we'll see where it lands. But you are essentially correct, Roland, that Senator Gordon has legislation to meet in the middle, and it didn't really meet in the middle. We're still on the outs if it passes.
Well, his middle, as far as Montechusett Regional is concerned, is $50,000, and I think that's a little bit, a little bit beyond your capacity to handle that.
And that's our contention, right?
Yeah. Okay. Anything else on that point? I'll just move on to the 5-year statements. I just wanted to discuss some of the items. I believe the sheets that you have, I sent some kind of points on them. I don't know if you're going to pull those up.
Kayla, do you have what Roland sent to
Have those
Linda?
available?
Oh, I'm sorry, the 5-year statements, Roland.
Yeah, exactly.
Okay, I'll send those to Kayla. I'm sorry, I didn't send those to her. I'm sorry. Hold on a minute.
So they'll get that up in a minute, Roland. Roland, if you want to say something else, keep going, or we'll just wait for this to be presented on the screen.
Yeah, no, I'll wait for for it to come up on the screen so I can follow the flow here of what I've got to discuss. Okay, good news.
I just sent them to Kayla. Sorry about that, Roland.
That's okay. Can you make that a little bigger, or is that okay? Now, obviously, you can see the points that I'm going to discuss. The first one is the receivables from the revolving loan fund. Just bringing to your attention that if you look at the balances in 2020 and 2021, you'll see that probably pandemic issues affecting the individual who has the loan. He made no payments in 2021. I've seen some payments that he has made subsequent to the fiscal year. I think it was about a $41,000 check. Or at least he's back in line, keeping that going. But they say it gets kind of scary when you start looking at that size of a receivable or a potential of default on it. Now, a little further down, if you can just scroll that up, I've got compensated absences. Now, I just wanted to bring that up to your attention. Usually compensated absences are a relatively consistent figure. it's gone up $24,000 from one year to the other. It's, due to increased staff who are earning comp time, who are earning, vacation time, but obviously haven't had the opportunity to take it. So the expense is recorded when the vacation is earned, not when it's paid. So that's why I was just bringing it here, making a point of it's up $24,000 in 1 year, which would seem to be kind of large. The next item is the revolving loan fund, and you'll see that that number has been consistent over the 5 years. The reason is that is the amount of money that you were given, adjusted for some accrued interest that was added to the loan when the individual with the loan fell behind. So that obviously is what should be available to be loaned if he were to pay off his. Now, if you take the 411 and subtract the 258, that's essentially what you have available to be loaned out, which is not a lot of money when you're considering, what it would be used for. The other item on this page is the unrestricted, and the reason I highlight this particular portion of the net position is that's the number you should key on when you're assessing the financial health of the agency. You actually have a positive $231,000 net position. You have to totally ignore the OPEB amount. It's more fiction than fact. And so, like I said, just focus on that unrestricted, and that's what you're going to see. That tells you the real activity that's going on with the agency. It started out at 135 back in 17, and it slowly worked its way up to almost $100,000 more. Now, the statement of revenue and expenditures, that's the next sheet. You'll see the first star is next to the total revenues. The reason for that is obviously you notice an increase of 20% in revenues from 20 to 21, getting some additional state and local contracts. A nice bump up from some previous years. The line under expenditures, direct salaries, obviously has new hires for these programs that you've picked up, and obviously the expense of the direct salaries drive up the revenues. They obviously have a direct impact on that. The next item is conferences and meetings. You're going to see this in both locations. You're going to see it here and in the indirect costs down at the bottom later on. Obviously, pandemic-related reductions. Either everybody is doing something like this, doing Zoom meetings, because not anybody is going anywhere, which obviously is, a good safety factor in these things. I kind of believe in that. I haven't been to, I'm trying to think of the last time I actually went to a place. I remember going last year for a day out at Montechusett. I think I went for a day in Worcester, and Haverhill is just down the street, so it makes it a little more convenient, but I don't think I went there for more than a day. It's just a sign of the times and the safety precautions, everybody is taking to kind of get through this. Now, the indirect costs, you'll see it's just up marginally from the prior year. I'm just going to discuss individual items in a second. The operating excess, this is what I was talking about when we're looking at the budgeting. This is where the real profit of the agency is reflected at $34,788. You'll see the OPEB line below it. In the prior 3 years before 21, those were the expenses that were added in. Fictitious expenses, just like I continue to maintain on all of these in the OPEB, that none of this is real. It's actuarial computations. They don't involve outlays of cash, and they never will. So this is the point of segregating it out here, so that you see that the real earnings from the agency for the year is just under $35,000. Now, the indirect cost rate obviously has.
Excuse me?
Yes.
I have I thought you were going to take questions as we went along on the sheet, so I just have one question.
Okay, yeah, yeah.
And maybe up. It wasn't, you don't have it asterisk next to it, but it was the consultants under expenditures.
Yeah, yeah.
And
That is
isn't that
also part, that's also part of
bit
what
of an
drives,
increase?
yeah, that's what also, these are direct
Yeah.
costs for contracts, which also drive up the revenues. You've got the people working on the jobs, and you have some of these contracts that require that you retain others with, you know, selective abilities that you probably don't possess in-house. So you contract out with other people. And this is, you know, something I probably should have highlighted that, but I think it's just, you know, an oversight on my part. Thank you for bringing that up.
This is Barbara. Glenn, could you tell us more about the consultant expense? What kind of consultants is MRPC using?
I can, Glenn, if you want
Yeah,
me
can
to.
you, because I don't have the contracts in front of me for mental loss. Linda,
Yeah.
please continue.
So the majority of it is EPA, brownfields. It was Beta Group.
Right.
So that was the huge chunk of it was that.
Yeah, so I'll give you
That's
context.
180,000 out of that.
Right. So when we receive an EPA, Environmental Protection Agency, brownfields environmental site assessment grant, it's usually the past few grant seasons, it's been $300,000 that we receive. We receive about 10% for what the EPA calls programmatic costs. I call it administration. $270,000 of the 300 goes to the consulting firm. The grant term is usually 3 years. We usually do complete all of our work within about 2 years or 2.5 years. So that would be the Beta Group bill under the US EPA grant. Thanks, Linda. I'm glad you jogged my memory.
You're welcome.
Okay. Any other questions at this point? All right, where were we? I think I was on just discussing the indirect cost rate going down, you know, pretty dramatically, and that is resulting from more direct salary dollars. Because if you were to look at there's a page in here, direct costs, a schedule, which tells you how the indirect cost rate is actually calculated. It would be you divide the 838,000 you see in total direct costs by up the page. If you could just scroll up the page a little bit more to the direct expenditures. It's divided by the 710,000 direct salaries. So there's your 117% indirect cost rate. That's the mechanism for how you determine that. If you're looking at prior years, you'd be dividing 819,000 by 566, which obviously will give you a much larger number. And by having more increased direct payroll impacts on what your overhead rate looks like. You're still spending, for the most part, the same amount of dollars. It's just more of it is going to direct expenditures that where the work is being done versus carrying overhead, supporting overhead. So.
Roland, this is Barbara. Can you
Yep.
tell me what the acronym OPEB stands for?
That is other post-employment benefits. Mostly when people look at benefits, it's retirement. The focus is on retirement. Other post-employment benefits is pretty much anything but retirement. And this is the health, post-employment health benefit computation. We actually have a actuarial study. There's an actuarial study done, you know, to determine this.
So, so health would be one OPEB. Are there other expenses? Is there like long-term care insurance or something like that?
It could be. It's mostly in the medical area. It could be dental. It could be health. It could be, you know, those type of items. It all depends on what it is that you would offer.
Okay, thank you.
Okay. Now we were down. Now, the retiree health insurance, this is, I alluded to making a reference to something I was going to discuss later on, and this is it. Under the retiree health insurance, what you see there, the numbers, the 22,547 and those going back, are pay-as-you-go costs. Those are the bills come in. You do not have an OPEB plan at this point. All you've done you've moved some money into a separate bank account. And in order to have an OPEB fund, which would impact some of the numbers that, would be entered into your accounting system, some more, would adjust the actuarial numbers if you had a trust account opened up where this money was set aside in it. By setting up a trust account, obviously you walk away from the money that you're putting into it because you have no capability of getting it back. Putting it in a separate bank account does not accomplish that. So that's, the reason I bring up this point at this time. I know it's been the agency's intent for a number of years to say, okay, we want to start funding one of these things. But again, just putting it from one checking account to another checking account will not accomplish that.
Roland, if I may speak to that, that's exactly right. We're just kind of setting the money aside. I figured when it gets to be around, maybe 20, 30,000 or so, that we could create a trust.
Okay.
I don't, that's going to cost money to set up the trust. So I'm just kind of waiting to see if we could fund it. And so far we have been, about $2,000 a month is what I've been putting away for it. So.
Okay.
And if I may add to that, we're putting it away in our MMDT account, which earns a little bit of higher interest. So,
Right.
and Linda came to me, months ago with this counsel about, well, let's squirrel the money away for, let's say, $2,000 a month until we build up to a certain point. So it's not in our cash, the money that we're squirreling away. We're taking it out of our operating account, a checkbook, if you will, putting it in the MMDT account to say, okay, it's kind of like cigar box accounting, but we can see it. It's over there, right? And then once it builds up to a certain fund, we build up a trust. Now, I don't want to get into the problem that some other RPAs have had, but they funded this, and they overfunded it, and now the only reason they can take the money out is to pay for these costs, but they put too much bloody money in it. So we're going to try to find a balance, but we are going to set up that trust. Yes.
Yeah. Well, the others did put a fair amount of money in, but a lot of what they now have in those accounts has pretty much been driven by the market.
Yeah.
It's been a phenomenal run in the market for these plans. I think one of them I saw it was about $200,000 it went up. And that was a hell of a return from a percentage standpoint. Maybe now it's not so much with what's going on out there, but except for the last couple of days, it bounced back. But who knows what's gonna happen going forward, with the international situation, and this could all come crashing down. And you might say, gee, it was a good idea to keep the money in the bank.
Yeah, we're going to invest carefully. We're watching all those variables. But Roland, it's an excellent point. We still want to do a trust. We just want to fund at the appropriate level, and I don't want to tie up a lot of money that you can't use for anything else but one item. So that's we want to strike a balance. That's all. But good point, Roland. Thank you, sir.
Yeah. Okay, what else was the items below that, consultants, is just that I think you had a study done last year, obviously not repeated again in 2021. The travel and conferences alluded to that earlier about nobody going anywhere during the pandemic. The equipment, significant purchases of computer equipment, and a lot of it does not meet the capitalization threshold, meaning that you capitalize anything that has a singular asset value of $1,000. So if you buy a computer for $900, you don't capitalize it. If you buy one for $1,100, you capitalize it. So the one for $900 is going to show up here. The other one would show up on the statement of net position above, and how that would fit into the expenses here is the bottom line called depreciation. You would say, okay, we're going to spend $1,200 for something, and it's going to last us 5 years. So you're going to take $240 of depreciation every year until that $1,200 is gone. But if you spend $900, you get the $900 here all at once. So it's just the, you haven't apparently gone into replacing a lot of computers. I suspect, with the additional people coming on, they probably needed some equipment, and probably a good idea to, have a capital situation where you're looking at, okay, replacing computers every so often, maybe 5 a year or whatever, to try to average out your costing as far as the indirect rates go.
That's good advice. I'll take that up with our IT staff in the next investment. And that was an investment in computers to answer everybody's question. And we needed to buy some laptops to send people home. So you're spot on, Roland. Thanks.
Okay. And let's see, is that travel? Yeah, well, that is it. That was the points I wanted to cover as a result of the particular pages in the audit that were either repetitive discussions from the past or some new things that were here for the first time. We have a data collection form that needs to be filed, and I believe at the end of the audit presentation there's generally a vote on the acceptance of the audit so that we can proceed with filing that data collection form tomorrow.
I'm sure Mr. Pease will make that motion. He does it so well. He does it to the letter. However, may we go back to the Kayla, can you go back to the page that you're okay? Can you scroll down, please? There was one point I wanted to make on the sheet prior to this one, if I may, Mr. Chairman. Just one. Let's see. In the middle of this page. Thanks, Kayla. The compensated absences. There's a lot of vacation time built in this. So I just want to remind everybody two things. One is we don't have comp time anymore, but we do have vacation time. You will see hopefully this will go down in the next audit for FY22. We had several people leave the organization at the tail end of fiscal 21. So they're not on the books in fiscal 22. So you won't have, basically we had 3 people leave with 29 years, about 20 years or 25 years, and the other one about 41 years. So those 3 people were earning vacation and taking vacations to the tune of 5 weeks a year, they were all earning 6 weeks a year. So that 18 weeks a year in compensation at salaries of whatever it was, $78,000 to $93,000. You can just do the math. So we should see a reduction next year. We have less of those people on the payroll. There was one other comment I wanted to make, but I meant it about the comp. I'm good. Thank you, Roland. Thank you, Mr. Chairman. Back to you, Roland, or Mr. Chairman.
No, I'm all set with my end of it, Glenn.
Thanks, Roland. So back to you, John. Thanks a bunch, Roland. Great presentation as always. John, I can see you muted, but you are muted, just so you know. We need you to lead us to the motion.
I put the camera back on, but I hadn't. All right, I'm back. So we need to take a vote to accept this audit. Is that correct?
I do want to see one.
There's Alan ready to go.
Mr. Chairman, I'll make a motion, accept the audit as presented.
I'll second that.
Can you hear me?
It's been motioned and seconded. Is there any questions? Any other questions other than what we've covered? Seeing none, I'll take a roll call vote to accept this audit. John Kalepsiak, aye.
Okay, that's saying that.
I don't have a list of who's here, Glenn. I don't know
Okay, I'll call out the names if he'll help you out there. Laura, you were voting. Go ahead.
Some people are.
Laura voted aye, I believe, unless she chimes in and changes. Roger Hoyt, how do you
Yes,
vote,
you
sir,
did.
for our chair?
Aye.
Laura Schifrin, aye.
So we got a couple ayes. How about Jessica DeRoy?
Aye.
Mr. Allen Pease?
Aye.
Mr. Winchendon, Rick Ward?
Aye.
Stacy, did I get you?
Nope. Stacy Donahue, Harvard. Aye.
Thank you all. I don't think I missed anyone. If I did, you can throw a
Barbara
golf
Yocum,
ball through.
aye.
Barbara, I'm so sorry. I can't see you, Barbara. I apologize. That's on me.
I'd like to
Uh,
add, Roland, I've attended several of your presentations now, and you always, I don't know how you make it very interesting. You take a dry topic and make it interesting. So thank you for that.
I appreciate that. Appreciate that.
I
just wanted
second
to.
that.
I just wanted to bring one thing to your attention relative to this vote. There is a footnote at the end called subsequent events, and it's the commission has evaluated events subsequent to June 30th, 2021 through March 16th, 2022. And this is the significant statement right after it. The date on which the financial statements were available for issuance. So this is the point of voting on this, is that these can officially be issued. And obviously, you know, I always bring out, well, it's got to be for the data collection, because obviously that's, you know, we want to get that, but it's more important to follow that they are available for issuance, meaning you can now put these out to the public.
Thank you.
Thanks, Roland.
Okay.
So we did take the vote, so this audit is accepted. Is there anything more
Okay.
we need to do before moving on?
Well, not from my end, no. No, it's just, I appreciate everybody listening in, and maybe next year we'll actually see each other, you know, have an in-person audit, and who knows?
Keep our fingers
Fingers are
crossed, Roland.
crossed.
Yeah.
Wonderful. Just for everyone, while everyone's in the room, because Roland would probably like to back out, we just have one other piece of business. Roland, stay or leave, but the staff will need to send this audit now that it's been accepted to MassDOT. We'll put that in the mail tomorrow or Fridays, and MassDOT wants this. And I should mention, especially where Roland is here, Roland, the Federal Economic Development Administration, or EDA, by its regulation, don't quote me, I can't quote the regulation, but all other RPAs that receive EDA funds now use EDA as their respective cognizant agency, as in the past, MassDOT has been our cognizant agency. So I have to go through that process now, or Linda and I have to go through that process. I can't do it alone. It's really a fiscal issue. So I got to find the reg, talk to our EDR contact. Linda, I'm going to catch up with you over the next couple of days. So we have to go through that process. That affects basically, you know, EDA funding that's pending and another EDA grant that's going to go in by March 31st. So Linda, I'll circle back to you. Roland, I just want to make you aware what's going to change. And from what I've heard is MassDOT isn't fighting this to the other RPAs. They're just saying, okay, send us the information. So that's good news for MassDOT. We weren't sure how they were going to take the news.
Well, my understanding of it, Glenn, has always been that the agency that should be in charge of you is the one that provides you with the most direct dollars. Why it ever got switched over to MassDOT, because their money is not direct. Everything from them is passed through.
Well said. And you know, when about a year ago, EDA came to a MARPA meeting with all the RPAs and COGs in the room, the virtual room, and said, you know, here's the regulation. Our economic development representative for the state, Deborah Bevan, brought the EDA's attorney in and said, I'm just quoting you the regulation. This is what it says. We have to be your cognizant agency. So we're going to do a shift transition. Thank you, Roland, for that. Yes, we do get a lot of money from EDA. They're not always the number one grantor every year, but we do receive a lot of funds. Yeah. Thanks, Roland.
Yeah, it can get kind of tough when it rotates from year to year. So it's probably nicer when you add MassDOT because you could count on some consistency anyway.
It's always in our business. At least the way I'm running the ship now, it could change. But we get EDA money of 70 a year. Sometimes we get every 3 to 4 years we ask for a competitive grant from EDA, and we're asking for a $399,000 grant for them by March 31st. We got $400,000 from them for the last 2 years. But when the US EPA, Environmental Protection Agency, gives us a $300,000 grant, that's over the $70,000 from EDA. So yes, it's kind of like it changes year to year.
Yeah. I mean, you can't have that.
So I think we're going to go with the EDA. We'll stick with them as the game plan right now. So for all of those in the room right now. Roland, thanks, Mr. Chairman. I think we can move on to the only
Sure.
other item we have.
Thank you, Roland.
Okay, thank you. I'm going to be heading
Thanks,
out,
Roland.
so I appreciate the opportunity to audit again this year, and hopefully we'll see you again next year. Thank you.
All right.
Thank you, Roland.
Okay, bye-bye.
Thank you, Roland.
All right, Glenn, where were you? We're moving on to 4.1.
Yeah, yes, sir. If I may, for those of you who attended the March,
By all means.
thanks, Mr. Chairman. For those of you that attended the meeting March 3rd, so our monthly meeting that we held a couple of weeks ago, I had a virtually identical resolution on the agenda to ask for approval to leverage existing contract funds and use these as matching funds against an EDA, Economic Development Administration, grant proposal for future industrial lands for long-term economic recovery and resiliency, or FILTER. So the acronym is still FILTER, but I added another R. Sorry about that, folks. Actually, Kayla, if you could scroll down to the next page, please, so we can kind of look toward. Yeah, that's good. That's good. Thanks. If you look above the word resolution, there's a paragraph that says the use of LTA funds. And then there's another paragraph above that says, as a total of $399,000 and $60,000 can be raised. So on March 3rd, that number was $273,000 and change. Well, Glenn, why did it change? Because some of the numbers above changed. Mainly the two bullets you see there at the top of this page. That last bullet, which is really the fourth bullet in the total package here, up to $98,302 in in-kind funding for a portion of the executive director's time at the billing rate. So what happened, Glenn, between March 3rd and tonight? Well, here's what happened. So Karen Chapman, our planning development director, and I met with Deborah Bevan, who is the economic development representative from the EDA Philadelphia office. That's our boss. That's our contracting entity. And we realized that we could use some more funding to provide as a match against an EDA, Economic Adjustment Assistance Grant, for this FILTER project. That's what's going on here. So what I did was I increased my time at a portion. I think it was 10 or 15%. I can't remember. I don't have the spreadsheet in front of me. At the billing rate versus my labor rate. And I did it over 2 years, fiscal years versus one, because this is intended to be a 2-year project. So that was a $20,000 figure, or a 30-odd. I went up to 98. Also on that bullet you see on the top of the page, up to 100,000 in DLTA. What I did was I only took 50,000 from this current year, but I added 50,000 from the next fiscal year, and came up with 100. Those changes basically got us up to 399,060. Why do I do this? Here's the reason. DLTA, now I'm getting my acronym screwed up. The EDA requires a dollar for dollar or a 50-50 match, and you have to raise cash or in-kind or a combination to leverage their grants. So if I can come up with a buck, that's cash plus in-kind, I can get $1 out of the EDA. If I can raise $399,060 from cash and in-kind from the MRPC, we can apply for $399,060 from the EDA. Another variable you should be aware of, I didn't put this in the report. So you heard discussion a few minutes ago that we received $400,000 from the CARES Act, actually, for beginning of July, July 1, 2020. Technically, the contract gets signed in September. And that $400,000 contract ends this coming June 22nd. So for 2 fiscal years, we had a cash injection from a grant out of the CARES Act, money that fell out of the sky, to do a boatload of economic development planning relationship to the COVID-19 pandemic and the economic decline. Well, that $400,000 will go away June 30, and I'm looking for other funding to do another project, not just to replace 400 with 400, but this filter program is something that I was working on in 2016 and 2018 with the planning development staff. And basically, we have all the written materials. It's timed. We're just repackaging it to put it back together. The last thing I'll say on this is that when we met with Deborah Bevan last week, we told her about this project, and you said, and we have to clear them with her in a meeting basically first. Then we submit the paperwork to her. She takes it to a committee, and then it goes up the chain of command. She liked what she heard. The current fund for economic adjustment assistance is all about how you will create a resilient economy and how you will have it be more resilient in the future and how you will help it to continue to recover. And that's why the filter has the 2 R's at the end in the title of the project. So that's the gist, folks, of the March 3rd versus March 16th. We could legitimately add some more cash on the table to get some more money out of the EDA to study, a very large. It's not a complex project, but it's involved. So thus the resolution, be it resolved, the MRPC approves of my request to use the matching funds as detailed above to be used as matching funds against the agency's filter grant proposal. That's the background. I'm happy to answer questions if you have any. Thank you for your time. Mr. Chairman, back to you.
Mr. Chairman, this is Laura Schifrin. I'll make a motion to accept the resolution as presented.
Thank you.
Alan Hughes, I'll second
I
it.
have a question though. Okay, the motion's been motioned and accepted, and seconded for the resolution, but I did have a question. This monies you're talking about, this isn't exclusively for the MBTA communities, right?
This has nothing to do with the MBTA housing communities issue. This is all about economic development. So the district local technical assistance in that bullet you see there, that's the money that's being used to study the MBTA communities issues and other housing related issues. And because housing and housing of the workforce is related to economic development, we can use a portion of the DLTA funds to leverage the Economic Development Administration grant dollars. But this is not to study the MBTA stuff. We're using the DLTA bucket of money to study the MBTA communities issue.
Okay. All right, so we had a motion and it was seconded. So unless there's any other questions, I say we'll take a vote, roll call vote to accept the resolution as stated. Tlepsiak, aye.
I can run through
Again,
the
I
names.
don't have that list done.
That's okay. I'll go through. Roger, how do you vote, sir?
Aye.
Jessica DeRoy.
Aye.
Laura Schifrin.
Aye.
Thanks, Laura. Alan Pease.
Aye.
Barbara Yocum. I'm not forgetting you twice in a row.
Aye.
Thank you, Barbara. Mr. Rick Ward.
Aye.
Stacy Donahue.
Aye.
You have a unanimous roll call vote, Mr. Chairman. Back to you.
It's therefore accepted. Want to move on to 4.2?
I have nothing under 4.2 unless anybody has questions. We're moving into a state now where generally I've lifted the mask mandate internally. I'm keeping the doors locked. I'll take group meeting requests on a case-by-case basis. I want to protect the staff and their families and everybody they interact with. So that's still a primary concern, even though the case counts are counting down. That's all I have. Thank you very much.
All right, then, if necessary, I would then ask for a motion for adjournment, or can I just adjourn?
Depends on what your style is. It's entirely up to you, Mr. Chairman.
Well, seeing as there's nothing more to discuss, I would declare this meeting adjourned.
Thank you all for your extra time for an extra meeting this evening. Take care this month. Thank you.
Thanks.
Thank you all.
Good night.